money, of course. Yeah, you make money from the educators. The second way is you taking trade from the G4 Connect app, just like you've been told by Coach Greg. Okay, while the last, I would say the last, but there may be ways coming in later on. But for now, the third way is using the scanner. Now, using the scanner is actually the part that, you know, here you have the total freedom actually, because this time around, you don't have to wait for a coach. You don't have to wait for an educator. You just go to the market yourself, depending on your preferences, and then you look at the market, and the marker, sorry, and the scanner helps you to take that decision. No, you take the decision, the scanner will show you the way, clear the path for you. Okay? So tonight, we're going to be talking about one of the scanners. Let me share my screen straight on. I'll share my screen now. We're talking about one of the scanner, and that is the Smartmonics Scanner, Smartmonics. A lot of you must have been hearing about Smartmonics. It's one of the scanners. I mean, there's nothing more to the fact that it's one of our scanners. We have several scanners, as you can see here. Okay, we have about 9 scanners. So Smartmonics happen to be one of them, as you can see. Okay, so this is Smartmonics, right? Now, I will try as much as possible to speak in a way that the newbies will understand. And it's worst case scenario, even if they don't get everything from this particular session, they can go back and watch this video and understand how to use this. Remember, first thing is this, you know, learning is about the mindset. You understand? You know, there's this saying that if it's as easy as you believe, it's as difficult as you believe, you know. The first thing is you have to first tell yourself that this is simple, this is easy. Because the moment you start looking at it that is difficult, complicated, it's going to be, you know, because the mind is already blocked. Now, looking at this chart, maybe feeling like, oh my goodness, how am I going to look at this? How am I going to deal with this? Now, the thing is, you don't have to deal with anything. Rather, you just have to pay attention to the points to look out for, things to just look out for. This is not different from your GPS, as a matter of fact. When you drive, everybody, like I would say virtually everybody, in fact, even those who don't drive, virtually everybody know how to use their GPS. Meanwhile, you're not a geologist. You don't know anything about geography. You don't have to. All you need to know is how to use what? The GPS. The same thing with everything in life. So when it comes to Forex, you know, the aim of GFO is to help newbies to trade like a pro, to live their life like pros. All those things that we have learned for years, trying to catch up with and all that, they are telling you that you can come today, learn how to use these scanners, and those scanners will deliver the same thing. You understand? Let me give you an instance. You know, I have to tell you this so you appreciate what this scanner is doing. I want to give you an instance. You know, I want to give you an instance. Now, as a Forex trader, I'm talking about myself now as a Forex trader, okay, which doesn't have anything to do with what we are doing here. I mean, just be a GFO member, you make money as a Forex trader at the end of the day. And anybody who make money from Forex trading is a Forex trader. It doesn't matter whether you are the guru. As a Forex trader, if I'm to look at this and analyze this now, I will do a lot of stuff. I will do a lot of drawing, a lot of charts, a lot of data collection and all that. Oh, sorry, I've forgotten that I only shared this part. You understand? But then what GFO is doing is like telling us that, hey, you don't have to do all those drawings and all those charts, all those lines, all those things. No. All those charts have been done. Everything is done. You don't have to look at the chart at all. What you need to look at now is what? Look at the pointers. So all you need to pay attention to are the pointers. Now, I'm not the writing type, but I will try as much as possible to type out some things while we'll be talking about this. So let's go back to the scanner. Smartmonics. Let's talk about Smartmonics. What is Smartmonics? Let's start from the name. Maybe to start making sense from there. Smartmonics. Actually, Smartmonics is just a combination of two most powerful strategy in Forex trading. Okay? It is most powerful because that is what the most powerful people use actually for their own type of trading. The institution, the banks, the CBNs of the world, not retail traders. The CBN. This is how, you know, smart money, we call it smart money concept. Let me start from there. Smart money concept. Some call it like, you just call it with the acronym SMC. Okay? This is a very superb strategy that people who use it, they are like, you know, they are like tagged as those who really handles the market. Now, this smart money concept is actually, we call it smart money because it is a strategy that allows you to know when the banks are in the market. It allows you to know where the real money is. It prevents you from being used by the market because let me tell you the truth, the market is a user. The market gathers the money of retail traders here and there, put them together, give them to the big boys. They use it as liquidity to move to the next level. Now, you don't want to be a prey. I mean, rather, it's better you roll with the predators. At least that gives you some assurance. You do the hunting. You are not the hunted, right? So, but the way you can do that, because they won't call you when they are coming to the market. They won't say, hey, hello, how you doing, Greg? Yeah, well, I will be coming in this evening. I will dump in a lot of billions of dollars and blah, blah, blah. No, no, no. They don't even want you to know that. But from the idea of those who are experienced, they've been in the market for long, they know how these people move, they calculated their move and put them together and make it a strategy such that when you follow that strategy, you are following them. You know when they move and you can avoid those traps they set for others. And with that, you make more money as they make money. You make money. Because the worst thing you can do is trading against these guys because they have the volume. They have the volume of orders. They have the money. They control the market. So trading with them means you are using what we call smart money concept. That's how we call it smart money concept. Now, this concept is something you have to learn. A lot of things that are embedded in it. I'll tell you about later. Then we have another strategy here called harmonic patterns. Harmonic patterns. Don't worry about these names. You won't need them. It's just that I'm giving you an introduction so you know how important this is. We call this harmonic patterns. Harmonic pattern is another strategy or style of trading, which is basically, this one is it's based on calculations. It's based on mathematics. It's based on like 1 + 1 = 2, 2 + 2 = 3, just like simple as that. So this one actually does something. With these harmonic patterns, it's already there. You don't need to think about it. They created it already. It helps you to calculate reversal, that's reversal for markets, for the market, point of reversals, where the market will reverse. When I say reverse now, as you can see, the market can go this way. The market can really go where you are the part. Where is it? Oh, come on. Okay, let me just use this. Don't worry. Let me just use this paint because I was looking for the parts. No, I can see it. Okay, let me just use this. Don't worry. I'll use the brush. Okay, this is what I was looking for. So the market may be going this way, guys. Oh, sorry. Okay, so the market may be going this side, this way. Then it can get to a point, it will turn back and start reversing. Now, you and I don't know when that will happen. So the job of harmonic patterns is with the mathematical formula, they're able to create that strategy. Now, you are not the one that will calculate the mathematics. The strategy is already there. So use what they call Fibonacci. It's a tool here. You don't need to think about it. I'm talking about Forex traders now. So with that, when we draw the Fibonacci, it tells us every point where the market will reverse. Do you get my point? Now, if you put these two together, one tells you where the big money is to avoid being trapped in the market. The other tells you where the market will change their direction. Remember, in Forex, what do we trade? We trade direction. It doesn't matter whether the market is gaining or the market is losing. What matters is knowing the direction. When you know the direction, you either trade upward or you trade downward. When you trade upward, we call it a buy. When you trade downward, we call it a sell. You want to know when the market that is going down will change to going up. And when the market that is going up change to going down. Now, this helps to make that happen. It helps you know that. While this one tells you where to place your money, so you don't trade against the big guys. When you put both together, it becomes Smartmonics, which means this strategy, despite the fact that you're not even a Forex trader, for the first time, you're going to be using a strategy that combines the best strategy used by the biggest guy, the most secure strategy, alongside the strategy that tells you when the market will change their direction. This is what Smartmonics does for us. Okay? If you understand this explanation to some point, put a 1 in the chat box. I want to be sure that I'm not, at least the introduction of this Smartmonics. If you understand, put a 1 in the chat box, please. All right, we have a lot of ones. Okay, good. Thank you. Meaning you're all following. Good. So based on this, guys, based on this one, so what is Smartmonics? Simple. It is a smart trading tool, you know, I would say from the stable of GFO. And the simple job is to help you find like high profitable or high profitability trade setups using the smart money concept, the harmonic pattern, and so on. Now, that's just a definition, but you know that's not what matters. What matters now is you are looking at Smartmonics now the way it looks here. What do you understand by what you are seeing? That is the next thing you need to know now. What does smart money shows you? What does it show you? When you look at it, what does it show you? Okay. Number one, the first thing it shows you is it shows you what we call the buy and sell zones. The buy and sell zones. Remember, I always say this when I'm teaching the scanner, any of the scanner, that all the scanners are color coded, such that you don't have to look at charts, you don't have to think, you don't have to even do anything, just know colors. When you know colors, you are okay. So all the scanners are color coded. Now, sell and buy zones can be recognized. Let me look for another pair that is alive. I'm coming. This is what's going on with GBP USD. Okay, I want to look for another pair. Though we have those zones here too, but I want clearer one, something that you can easily recognize. Let me use US 30. That's my favorite actually. I'm sorry, US 30. So let's look at the first thing the smart money scanner tells you is the buy and the sell zones. Now, anytime you see green zone like this, look at this. When you see green like this, I hope you all can see it, right? Look at this fainted green. Whenever you see this green like this, it is a buy zone. Now, that doesn't mean you should buy. It's only telling you that here is a buy zone. Just like they will tell you no parking zone. But you know that even when they say no parking zone, you see cars that are parked there. So they may now later explain to you that, okay, it's only staff that can park here, or it's only this that can park here, you know. But the details is, you know that this zone is for what? Parking. No, so it's a no parking zone. The same thing here is a buy zone. Now, why I'm saying this is some may think, oh, it's a buy zone. Anytime they see this, they just go and buy. No. It's a buy zone. Whenever you see the red area, is a sell zone. Now, when I say this, a buy zone means this is where a market should come, or a potential area market will come. Like I use the word potential, where markets normally would go up from here. And on its way up, this is another area the market will get to, and then the market will start coming down. Okay? Will get me eventually, you know, when I'm presenting this. So I hope I'm fulfilling that part. I hope I'm not too fast and I'm not too slow. Let me see that. Let me see. Am I too fast or too slow? Which one? Let me know. If I'm okay, just tell me if I'm okay. I mean, it's easy to catch up the way I'm saying it, right? All right, good. Thank you. I only need one person to tell me that anyways. All right. So remember again, the buy zone, the sell zone. So that's the first thing Smartmonics shows you. Okay. Now, the second thing it shows you again. The second thing it shows you, because if you don't know these things, everything will look like magic to you. The second thing it shows you is order block. Order blocks. That's the next thing it shows you, order blocks. Now, let me type what I mean by order blocks. I'm not good at typing, but just take it as it is, right? I am lazy at that anyways. Order blocks, this is what they call it. And look at it, order. This is order, like you're ordering for something, right? blocks. So what does this mean? This is where all the banks, the institutions, where they place their order. So if they're going to buy, they will dump all their liquidity, all the money, everything, they will dump it around here. If they're going to be selling, they will dump it around here, the selling area. But that particular area, that point, that particular candle, where they are dumping that money, that area, that segment, is where they call order blocks. So all the blocks of orders are filled up in those areas. So how do you now know order blocks? Smartmonics already, the scanner has already showed you where the order blocks are. Guys, you see, let me zoom this. The other blocks are marked out on these areas. Whenever you see this, guys, whenever you see this, whenever you see these together like this, and you see a candle that is measuring from here to here for these two, then that is an order block. So this candle is actually the order block. It's the candle that formed the order blocks. Okay? I want you to know that now. The order blocks, this is the candle that formed the order block. Now, how do you know a order block or another block? Sorry. Whenever you see this zone, normally, if I'm to explain this to Forex traders, it will be different. But remember, we are GFU members. Our main mission is to keep things simple and make so much money. So I'm going to be telling you, whenever you see these two together, attached together, look around there and look for the candle that is binding them together like a binder. That is the order block. The same thing, we can go down. You come to this part too. As you can see here, we have these two binded together by this particular block. This becomes the order block. This is the order block. So any of these bars you see, we call them candles. All these bars are called candles. That you see that is binding these two together. That area is where you have an order block. What does that order block mean again? This area is signifying, telling you that, hey, the big guy's money is here. The money is here. The big guy's money is here. Okay? They have their money hidden here. And anywhere the money is where the market moves towards. One thing now you want to know, I want you to know something about this market. It's simple. If the market is moving this way, the market is either moving towards where the money is or is coming from where the money is. So if the market moves, so which means the market only moves to where there is money. If you see the market going this way now, it means there was money here. The market probably took some money or left some money and go for another money at the top. So money is like the magnet that moves the market. Any direction you see, there is money there. But how would you know exact zone? The other block will point that out for you. So Smartmonics Scanner is pointing out for you, because if I tell you how we Forex traders know, is a different ways. I mean, there are many ways we know this, but we have to check a lot of things. You know, we have to check what we call BOS, break of structure. We have to check all those, a lot of things that we check. That, okay, this is another block. But hey, Smartmonics said you don't need to check all that. I'll give you the other block. You have an other block. Now, you see, that makes it easy for a new person. So whenever you see this, it's an order block that is binding these two together. It's an order block. Now, we have seen first thing that Smartmonics shows you, which is what? Can someone remind me the first thing it shows in the chat box? Someone should remind me, what's the first thing the Smartmonics shows you in the chat box? I need someone to say this. Tell me the first thing I talked about that Smartmonics shows you in the chat box, the zones. What's the name of the zones? The buy and the sell zones. Thank you very much. I love this audience. God bless you all. You guys are making me happy right now. The buy and the sell zone is the first place. The second place is what? What's the second place it shows you? Yeah, demand and supply. That's the name Forex trader will call it. Yeah. Order block. Good. Order block. Thank you. Order block. Yes. Order block. That's the second stage. So we know now. The third thing is going to show you is called, let me type that out. It is called liquidity zones. Liquidity zones. Liquidity zones. That's the fourth thing is going to show liquidity zones. Now, liquidity zones are where stops are grabbed before real moves. Now, let me tell you what these guys do. I told you they use your money, they wait for you to make that mistake, and they use that mistake against you. Now, so wherever they are, they will make you believe something, because in Forex, there's something we look out for, patterns. When something moves towards this area, you see it moving like this, and it's not breaking. What do we do? In normal Forex trading, they will tell you, okay, meaning this market cannot break down. It's trying this, there's a support here that's not making it to pass through. It's trying to go up. So most retail traders will take this one as their entry price, and they'll make their stop loss around here. Hope you understand. They will mark this place out now. They will mark this line out. Let me mark it. Let me show you what I mean by that. So they will mark here. They look at this blue line. They will mark this place because the market keeps going, coming to that same point, coming to that same point, coming to that same point, and like it's not going for, like, okay, I think this market is about to sell. Those days, the first thing you learn, support and resistance. You say there's support here, the market cannot break it. Okay, it has touched it like how many times? Okay, let's do it. They do this and put their stop loss around here. Now, at the moment, one person is doing it in Indonesia, another person is doing it in Nigeria, millions of people are doing it all over the world. Imagine if you are risking $100, $10, $50, and there are over how many billions of people all over the world doing that. Imagine how much money that will be here. Now, because they are doing that here, that is what they call liquidity. There's a lot of money here already. These guys know that there's a lot of money here. And they know that these guys are right, that the market wants to go up. But they say, but this money that is here, we need it as energy. Instead of us using our money to go up, let's use these people's money and push the markets up. Since they want it to go up, it will go up now, but before it goes up, what do we do? Let's take their money. So what they do, they come down, zap. They take all the money. So that's why you see people shouting, stop loss hit, stop loss hit, stop loss hit. All the stop losses. This is it now. So they call it liquidity area. How do you now know liquidity zone? It is represented with this green and red. Now remember, other block is represented by that which is bringing these two together. Which is the candle you see here, binding them together. Now, but liquidity is measured with those things that are binding together. So when you see the green and the red, now what does that mean? Whenever you see the red that is more than the green, it's simply saying, they call it, now don't get it twisted, okay? It's not really hard. It's just normal thing. We call it sell side liquidity. Sell side liquidity. We have what they call buy side liquidity. Okay, I didn't put the side. I knew that something was missing. Okay, sell side liquidity. And then the buy side liquidity. I'm just introducing, don't worry. Even if you can't remember this name, it doesn't matter. It's just that you need to know them. So when you see them, you don't get confused. I'll put them all together as a strategy, and you see that it's so simple. Okay? Now, what does sell side liquidity means? Any money that is placed when the market is down, on its way down, like the market is down now, right? And they want to go up. All the money that is placed is called, down means sell, up means buy. So if you are going up, you need sellers. Just like, okay, let me give an instance. If you sell TV, now it means you also buy TV, because for you to sell, you have to buy TV. Now, when you buy your TV, you have to sell it to someone. So when you sell it, when you collect their money for selling the TV, is that money that you now use to move up and buy again. So the same thing is happening here. These guys have to sell. At this point, they are selling, they are called sellers. Because they are sellers, this zone becomes a sell zone. And any money they get here is gotten from the sell side during the time they were selling. So the money they get here is that liquidity. Money simply means liquidity, isn't it? When you say liquid cash, liquid whatever, I mean, it's liquidity, right? So the money they got here is from selling. So they call it sell side liquidity. Now, what does sell side liquidity does to the market? It allows the market to be able to go up for buying. Just like a guy who sells his TV allows him to collect money, bring his profits, put it aside, use the capital to go buy more TVs. Now, you can't buy if you don't sell, isn't it? So sell side liquidity happens at the bottom, sell area. Buy side happens at the top. Now, let's go back to Smartmonics. Smartmonics it tells you, I told you before, sell zone, buy zone. It tells you there is other block. Now it's telling you again that there is liquidity here. Money is here to be grabbed. And how do you know that? Whenever you see these two things, meaning there is money here. But now you need to know which one is more. If you see the red that is more, it means you're on the sell side. It means the market is about to really go up. But if the green one is more, then it means the market actually want to go down because they are buying. When you buy at the top, you come to sell at the bottom. Hope you understand. If you understand sell side and buy side liquidity, put a 2 in the chat box. Remember, this is recorded. So whatever you grab here is a foundation for what you will grab more later. Put a 2 in the chat box. If you understand these two boxes here, the red and the green boxes, the red represents the sell side, the green represents the buy side. But here, whichever one you see more. So at the bottom, you always want to see the red more. At the top, you only want to see the green to be more. You see? So if you understand this, put a 2 in the chat box. Wow, I have a very beautiful class. Everybody's understanding this. Now, remember, we've not talked about the strategy. I'm still introducing you to all the components of the strategy, right? So these are the major things. Now, another thing I'll tell you again is these things you see here. There's a reason I'm telling you this one. I'm introducing these ones to you so it doesn't look like I want you to know everything you see here. Now, you see something like waves, all these waves. You see the green side, the red side wave. Now, whenever you see this wave is actually called VWAP. Now, just like whatever name you've heard before, you don't need to know anything about the meaning of this thing. Just know what it does or why is it there. That's all. That will make it easy for you. So this VWAP is actually simply used in measuring volume. It tells you where there are volume. Okay? So when you see this, you see buy volume. When you see this, you see what? You see sell volume. So there's enough sellers volume here, which means volume of orders for buyers, for sellers. Do you get my point? So every zone you see this VWAP is a zone where the market will touch and go to the other side. When it touches this one, it goes to the opposite side. So it's just bouncing around, and it expands as much as the market wants to expand, and also contract if the market wants to contract. So that's all about the VWAP. The last one I would like to share with you here is this one. Here, you can call it, let me see the easiest name. Just call it oscillator or just call it whatever you want to call it in your mind anyway. I don't want to use big words, but it's called an oscillator, okay? So it supports everything that is happening in the main chart. This is not the main chart. Just that all you need to focus on is this. You see, everything you see here is green and red. When you see the green, it means buy, the buy side. If you see the what? The sell, the red, it means the sell side. So as it's going on here also, this particular one here measures the number of what? Orders in the market by the sellers and the buyers. Simple as that. Okay? So we call it the RSI oscillator. Okay? So it measures the buyers and the sellers' orders in the market. So whenever you see the market around this area, it means the buyers are here to buy. And when they buy, what happens? Market will go up. But when they get to a point, the buyers are tired. The seller are taking over. That's where you see the red. Then what do you see? You see the market trying to come back down. So it goes up and down. I will tell you how to use all of these things together. I think these are the only thing I would like to point out to you, okay? These are the only thing I would like to point out to you. Later on, I will mention this one when I'm explaining the strategy and all these ones, okay? These are the key components. Now that we know all of these things, what is the next thing? The next thing we want to do is what you need to do. How do you use this scanner? How do you use all of this to make money? Okay? How do you use all of these to make money? Now, to use them to make money, it's simple. The first step is, now I'm talking to the newbies, okay? How you, a forex trader, will use it maybe a little bit more advanced than somebody who is new entirely. So if you are new, the first step is to wait for the scanner to call a trade. Let me tell you one thing in Forex. You see, Forex is more of waiting and less of execution. If you follow that strategy, that principle, you will always be successful in Forex. But when you jump, when you move too quick, then there will always be problem. That is why you see people like Nick Gomez, Eric Lucas, those guys that send trade ideas that hit profit most times. Nico and the other guy, Tony and Nico, they don't send trade every now and then. They wait. It's like a trap, like a hunter. You wait because the market is setting trap for you. You have to set the market trap for the market. So you wait until everything aligns before you take a decision. From my experience, I realized that after people have learned about smart money, most times they are impatient. Some want to start taking trades whenever they see the green side. They say, the green is here, it's buy side, you take. Well, the truth is, sometimes you win, but most times you lose because it will increase your losing rate. A no trade is better than losing because a no trade means you still have your capital. Losing means you have lost all. Okay? So you have to wait for things to align. Now, I'm going to be adding some little bit of things that may be technical, but I'll make them so simple for you. If you can follow these things, it will really help you. First, I will tell you how you should use this thing. Then I will tell you the cheat codes. You know, in everything, there are cheat codes, right? All right. So let's talk about how to use them. So the first thing, like I said, you wait for the scanner to call. Like the scanner called here now. Okay? The scanner has called here now. Okay? The scanner called a buy. Now, normally, before the scanner called a buy, remember what I introduced to you. I introduced what? A buy zone to you. So if the scanner call a buy, the moment you hear the scanner calling a buy, you want to check some things. First, you want to check those things we started with. Is the buy being called on the buy zone or at the buy zone? I want you to answer that. This buy that was called, this POI is the entry point. Is it around the buy zone? If it's around the buy zone, put an A. If it's not, put the B. If it's around the buy zone, put an A. If it is not, put a B. I like that. A lot of people say A. You see, we have more people understanding. You are right. So this is the buy zone, and it was called for a buy. But that's not all. So we check that one. Second check. What was the second thing I talked about? I spoke about, can someone remind me? I'm pointing it already. I'm giving you expo. What was the second thing I spoke about? Put it in the chat box. After the buy zone. So at the end of the day, you'll be the one even doing all of this. Thank you very much. Other block. Other block. Look at it here. Now, is there an other block around? Buy zone is there. Other block is there. I mean, yes, the other block is there too, right? Now, apart from that, what is the next thing we are looking out for again? Who can tell me the next thing we are looking out for apart from the other block? What is the next thing that you want to be sure? Liquidity zone. Liquidity zone. Do we have liquidity zone here? Yes, we do. Whenever you see this green and red block, it's telling you that there are money being placed here. Now, but this is a buy. Remember, we need a sell side liquidity, right? We need the sell side liquidity. Remember, we need the sell side liquidity. So if we need sell side liquidity, which is represented by red, you want the red to be longer than the green. So number one, check, buy zone. Number two, other block, check. Number three, the liquidity. That's the liquidity zone. You understand? Now, another thing again. Do we have the VWAP around this entry area? Remember, the green VWAP tells you that there's a lot of volume of buyers here or buying orders here. And the red one tells you that it's a sell area. So do we have the green VWAP around here? It's obvious, right? We do. You see? Now, that makes this zone valid. Do you get my point? That makes this zone valid. So Now, what we are expecting normally, what you'll be expecting now is to place what we call a buy limit here, hoping that the market will come down after getting to the next zone, which I'm coming to now. So that makes the zone valid. Now, there are other additions you can make do with. That's what I do. There's what we call A plus setup. What is A plus setup? Just like in school, when somebody is having A and the other one is having A plus, one is outstanding, the other one is high mark or whatever, high rating, and then the A plus is outstanding, which means standing out. Now, for our money, we need to care for our money. And to care for our money is the reason why sometimes it's good to take decisions that are clean. Now, added to everything is what I want to do. This is the reason why I introduced you to this one. Another thing you want to add to it is this. The area the candle was called, okay? The area the buy was called. Now, there is something here which you have to look for as well. You want to make sure that when you put this line on that candle, as you can see, it is aligning with the line here and it's on the buy zone also. And as you can see, if I put the line here, it is aligning. Do you see it now? If I put it on the other block, it is aligning. So what is here at this VWAP area is also here working out, which means like a multiple confirmation. So you want to be sure that anytime there's a call, you want to make sure that the candle is not here, why it was called. It's not here, why it was called, but it is here. Now, if they are here, does that mean the market or you will not win the trade? No, sometimes you win. But the truth is, if you want to increase your win rate, you have to make sure that you take the ones that are at the green area inside the oscillator section. That's the RSI. Okay? The RSI, okay? Now, that is that. So, whenever you want to take trade from Smartmonics, guys, first thing you look out for are all these things. Now, when you now have them in place, you have a trade. So, let's now talk about how do you now make money out of this? How do we monetize this thing? Now, to monetize Smartmonics, you need to understand the cheat codes. What did I call it, guys? The cheat codes. Now, I'm going to be talking about the cheat codes. I'll write them down and then I will explain them to you. Okay? Now, the first thing here, do you know that for me, now, do you know, this is now bringing my experience, right? That you can actually enter a trade right at the moment it was called. So long all these zones align, you can actually enter that trade that will still come back for other people to wait for. You actually be part of that trade. What do I mean by that? I mean, imagine you were in this trade already. Imagine you enter this trade from here. You would have been in profit now, at least TP3, which means you don't even have to wait for it to come back before you can make money. Now, how will you do that? What will not be your confirmation? Because the idea is a zone is created, you need the market to come back to it, and then you now wait for it there, and then it takes you up. That's how it's supposed to work, right? But the cheat code here is number one. There's what we call, I don't want to go deep into Forex, but then after the explanation of this, I will touch some areas that are Forex-like, but that will help your understanding more. And also those who are Forex traders, they will really appreciate this, but not now. So there's something we call rejection candle in Forex. There's what we call rejection candle. Okay? Now, rejection candles are candles that confirm a reversal. Remember I told you about something called reversal, remember, right? So in Forex trading, we don't predict, you know, I always say that, we don't predict the market. We are not gamblers. It's only gamblers that predict. We work with data and confirmations, just like everything in life. Just like if you go to the court of law, they will investigate, they will do this, they will cross-examination, they will do the cross-examination, right? They will do everything before they make a judgment. The same thing with the scientists, you know, when the thesis is brought forward, they will go and investigate. Some people will scrutinize it, they will try it, all these things will be jotted, will be recorded before they finally agree that, okay, this is something they can bring as principle. Everything in life, right? In Forex is the same. We don't just predict. We collect data. After collecting those data, we match them together. We see them, we make sure they align. Then from that data now, we now make an informed decision based on confirmations. We must confirm some things before we take decisions, right? So let me show you something now. I want to show you something. Where is this part? It's always okay. Yeah, it's here. Remember, I drew I drew something for you from the beginning. I said the market normally on its way up, at some point the market will reverse. And the reason why we have the harmonic pattern is to let you know when the market wants to reverse, right? Now, what tells you when the market wants to reverse? We already have them here. But then, because we have them does not mean you quickly take those, like you take the decision like that. That's why the Smartmonics does not just give you like that. It also does what we call confirmation. Imagine a scanner that does confirmation. That is to tell you that the scanner is not just all those scanners that are printed or that are just like built like a robot. The scanner actually thinks like human being, like a forex trader. Now, see, for you to know that this thing is actually going down like this, there must be some confirmation here. And part of that confirmation is what I want to share with you. I don't need to go deep. All you need to know is what I'll tell you. Anytime you see a yellow candle like this, you see one, you see two, or even just one, it is called a rejection candle. What did I call it? It is called what? Rejection candle. Now, when it comes to Smartmonics, you need to pay attention to this. It's a little bit technical, but it's simple to understand, right? When it comes to Smartmonics, we have 3 types of rejection candle. 3 types, okay? Why I'm saying that is, so when you see one that is not looking like this, you may be thinking, oh, this is not a rejection candle. I want to show you how they look like. So when you see, you will know, okay? Now, the first one we have is called the V-shaped rejection candle. So how does the V-shape look like? For a market that wants to come down, it looks like this. You see a short candle like this, then a long one will overtake it like this. This is called V-shape. A small candle will come like this, then a long one will overtake like this. That is the first type of rejection candle you look out for. I will show you here, okay? The second type is that one. I don't know what shape to call that, but this is how it looks like. It will start by giving you small movement here, like it goes up, comes down, goes up, comes down, goes up like 4 or 5 times, several times. Then you see a long one will overtake it. That's the second type. The third type is a combination of the two. Now, that one works like this. You will see a short one, a long one, then you now see this movement up, down, up, down, up. Then you see a long one that will take it down. So that is combination of these two. That is another type of confirmation. So all you need to do here is simple. The same way you know your road signs when you are driving. Look at this. Recognize them. So when you see, you will know. Okay? Now, I want to ask all of you, if you look at this one now, what shape do you think this one is giving you? If you look at this one, is it first? Is it the second or the third? Is it the first, the second, or the third? Let me zoom, let me make it bigger. This rejection candle is very important you understand it, okay? So is it the first, the third, the second, or the third? Let me bring them here. Maybe my drawing is actually not, not good, but then, let me just see the chat section. Anybody, just one person can help out. I should come again. Okay. Now look at this. You know, I told you the first one is the candle that will come, a small candle that will come, then the big one will overtake it. If like we're looking at buy, okay, let me use the buy. I think you will understand this way. Don't worry, sorry, that's my mistake. This is a sell candle. Let me use the buy. Let's go for a buy. Like a buy, you know, the difference is just one is facing up, the other one is facing down. So this is for, so let's talk about the candle again. Now I said there are different types of rejection candle. You know, rejection candle are type of candles that tell you that the market is about to reverse. A market that is on its way up, down here, the moment you start seeing that, it means the market is about to reverse, right? Especially when they're happening at these zones. The buy zone is happening at the liquidity zone, is happening at the other block zone, is happening at the VWAP. So if you see a candle like this, let's say a short candle comes down like this, then overtaken by a long candle. That's something like this. Then there's another one that may happen like this after a little up and down, small candles like this, up and down. Okay, then you have a long one overtaking. Then the last one is combination of these three. You may have like up, oh no, that's not right. That's not right. Let me delete this. That's not right. Okay, so you may have like this. You see, you have this, you have this, you have this, you have this, then you now have another long one again. Now this one is combining both this and this together. That's the third type. Now, I'm asking you that this one that you are seeing here, is it the first, the second, or the third? The third. Thank you very much. Many of you have even answered me. The third. You see why? Because look at this candle. It was a small candle overtaken by a large candle bigger than this one. But after that, what happened? All those smaller candles, then another small candle overtaken finally by all, like this one overtook all of them, engulfed all of them. So this is the type of confirmation you have here. In some, which you will see later on, you will see that it will be different. Now, I'm telling you how you can enjoy and take this trade, okay? Even without parameters. Guys, even without parameters. Let me delete this one. Even without parameters, so long you see these confirmations, they are together aligning. I'll go over them again. Number one. Let me go over them again. Number one, for a buy, I would say for a buy. For a buy. You have the buy zone, meaning it's happening at the buy zone. Number two, an order block is there represented. Next time I'll be calling it OB. Number three, you see the liquidity zone right there. Number four, you see the VWAP around there. I think that's number four, right? Then addition, which is a bonus. That is not a must. The RSI area, which is the one I told you of. I told you from the beginning. Why am I not seeing it? Okay. Guys, I'm coming. Let me make this reset price. Aha. Where is it? Where is it? Oh my goodness. All right, let's just stay on this one. Don't worry. That one, I think I've deleted it. I don't know. I've canceled it. The one I showed you at the bottom before. Okay. Now, when you have all of these things I just put here, all confirming, all you need to do to look out for as the last thing that will determine whether you take this or not is what? A rejection candle. Any of these three types. Rejection candle. Now, the moment you have a rejection candle, guys, I want you to focus on something now. Remember, we're talking about rejection candles. They are the ones that are painted in yellow, like this. Okay? Now, the truth is, the reason they're painted in yellow is because Smartmonics is helping the newbies. You understand? To understand that, okay, when you see this color, you know what this means. Normally, in your Forex chart, no, it's the same color. You just try to know. What you just need to know is what? The pattern. Do you get what I'm saying? You only try to know what? The pattern. Now, I want to give you this, the cheat code now, eventually. After looking at all those things, who is drawing on my man? Who is doing all of this one? drawings. Where are those things I wrote? My goodness. I'm coming, guys. I want to bring all those. Oh, God. I can't find them. Don't worry, don't worry. I can write that again. I'll write that again. But I want to show you something, guys. Now, the moment you see this, now zoom your chart. I want you to pay attention here. It's very easy, okay? Now, when you see the last candle, that long one that overtook all these ones, you want to see something. See what I'm going to do. Watch me. You will count from the first one before this one that is giving that long move. So you count 1, 2, and 3. I'm telling you the first way of taking, I'm giving you a cheat code how to enter the trade even before it retraces. You can make your money on its way up already. Now, you count what? 1, 2, 3. You see, these 3 must have what we call a fair, so let me use the word, must have gap between the third and the first one. Now, let's go again. 1, 2, 3. You count 3 from the last one, the one that's before the move, the one before the move, okay? The first, the second, the third. If you can see what I just counted, please put an A in the chat box. Yeah, I did zoom out. Okay, good. So I want you to pay attention. You see, this will make you money. I guarantee you to make you money. Now, count 1, 2, 3. Okay? All you need is, you need a gap to be between the first and the third for a buy. For a buy now is different because it's facing up. Now, for a sell, we're going to do for a sell. You see how it looks. So you must count 1, 2, 3. Now, there was a gap between the first and the third. Look at that gap now. It is what they call fair value gap. FVG. FVG. Fair value gap. Where are my tools? Fair value gap. Look at this gap. Between these two now, there is a gap. The moment you see this gap, that is a confirmation that this is a very good area. This is a very good setup. This setup is going to go up. Now, how will you know? Assuming, just picture it in your mind, that all these ones have not been formed. From this red has not been formed. All you need is, you see a rejection candle. As soon as this one closes, this is the first way of entering this market, okay? I'll show you the second way now. We have the aggressive way and we have the confirmation way, okay? So this is the confirmation way I'm starting with. So now, when you see this formation, because you now recognize, okay, you now see this long one, you now wait for the third one because you have seen this before this long move, then you know that there must be a third one that will come. You now count the 3. The moment you see a space like this in between them, place an entry here for a buy. What did I say? You place an entry at the top of the move, at the top of this. So if you draw something like this, like at the top of the move, where is the top of the move? Just below that third candle, making sure that below it, exactly below it, that will be your entry. And where will be your stop loss? Your stop loss will just be below the liquidity area. You see it now. Now, what did I say again? 1, 2, 3. As long as this third candle is formed, remember this is 15-minute candle, you will have enough time. Even if it's 5 minutes, you still have enough time. It's only 1 minute, you will not have time. And we don't trade Smartmonics on 1 minute, right? So it will take 5 minutes. If it's 5 minutes, it will take 5 minutes for this candle to close. Within that 5 minutes, you can place a buy limit as entry at the top here. And your stop loss will be below the first candle you counted, which is below. It has to be below the liquidity zone. It has to be below all these zones. Just a little bit below. It doesn't have to get to this SL. Then what do? The moment you do that, you wait. Now, when you wait for the entry, what do you expect? Because 85% of the time, this gap means another level of liquidity. The market must come back to tap into it for more power, for more liquidity to push further. So anytime there's a fair value gap, the market usually come back to fill that gap by touching inside it, because it is not normal for candles to have gap in between them. Like, let me show you something. Count from here. 1, 2, let's say 1, 2, 1, 2, 3. This first candle, second candle, third candle. You see, the first candle here ended here. Now, the last candle started here. If you see that, if you look at where they touched, where this one started from and where this one ended from, there's no gap between them. Now, the moment there's a gap between them, it doesn't happen all the time, but it happens most of the time. I'll show you another one. Look at here. 1, 2, 3. There is gap here between the first candle and the last candle here. That gap is being filled up by this one. It came inside it and tapped into it, right? So the same thing. So when you set a buy limit here, the market will come there, take you on, and then moves in your way. At least if you're in this trade, using it like this, you would have made some money. Like, let me say, how much now? At least if you're risking $10 on this trade that is ongoing now, using this same strategy, at least you would have made $30. Actually, you would have made $36.30. If you understand what I've just shown you, put a 1 again in the chat box. If you understand, put a 1 in the chat box. I'm going to show you again. Like, you know, this is not the end of it. I mean, like, we're still on this same trade, right? On the same, oh my goodness. Who is writing this thing, for God's sake? Can you control your hands? Eh? I'm drawing already. I know the drawing may not be fine. Maybe you want to correct my drawing there. I'm just joking. Please stop disturbing my screen. Eh? If you understand what I've just done now, put a 1 in the chat box. What is 0.5? You don't understand? Okay, Stella John. Oh. 1, 1, 1. Okay, good. A lot of people understood that. I will do it again using another example. I've not talked about how to take your TP. I'm still talking about your entry. I said, let me delete again. Don't worry, I'll take it slow. So, you know, at least I believe all of you knew up to this point where you counted 3 candles. You know that there's a gap. Now, the moment there's a gap, let me zoom this again. Let me make it bigger. Look at this gap now. This 1, 2, 3. Okay? Let me make it fatter, bolder. So if you see 1, 2, 3, the first candle ended here. That's why I put the rectangle box to start from that area. While the third candle began from this part. Now, the difference between them is the gap. There's a gap here because this one ended here and this one began here. So this gap now have to be touched by the market. The market had to break that gap. Knowing that is the reason why you placed your buy limit exactly directly below that third candle. And your stop loss below this zone. You don't have to get to this stop loss area, this zone. And that's how you get an entry. And you have what? You have a winning trade. This, if you understand this very well, you can actually use smart money. You can take trades like several times a day. And guess one thing about smart monies? If God helps you, if you follow all these things, you are patient enough, you take 3 smart money trades in a day, man, you have made so much money. Now let's go there. So that is how to make that entry. Now, how do you now make your TP? Guys, that one is simple. Don't bother yourself much about TPs. Focus on zones. Anywhere you see a new zone, make sure your TP ends before that zone or directly on that zone. But the safest is before that zone. Anything can happen around the zone. Do you get? So that's how you sell your TP. So if you are taking this trade now, let's say you're taking this trade, at least you would have made $30 or $36 on this one alone. It's okay, close it. Because for you to have used $10 on this trade, it means your account is about $100. And in a day, a very reasonable, nice, in fact, that you are doing very well is 10% a day, which is $10. So if you have $36, you've made like 36% on your money. Stop at TP3. Stop whatever. Stop just here before the next zone. Okay? Now let's go and look for a sell. So don't worry. So for those who don't understand here, you understand again when I use another example for a sell. Okay? Let's go look for a sell. Maybe I'll look for another pair because I'm tired of the way the screen is. Oh, good. Here we are. In case you want to take screenshots, Let me make this big. In case you want to take screenshot. In case you want to take a screenshot, these are the things you look out for. If you see these ones, even if the scanner have not called the trade, if all of these 5 are complete, see, as a newbie, you know, you now know why I introduce you to all these things, to recognize them. So when we tell you that the rules are to follow these things, when you see these 5 things, then you take your trade using the style I just showed you. I hope you have taken a screenshot because I'll be leaving this page to another one. We'll look for another pair. Okay. Oh God. Why am I having a problem? I like seeing everything here. Sorry guys, let me delete all my drawings first of all. It's annoying. This one doesn't want to go. All right. So let's go to another pair, or better still, okay, let's just go to another pair. Because of these things here, I could just do it from here. Okay, let's go to another pair. This is US 30, right? Let's go to, let me see, suggest a pair, guys, suggest pairs. How do I take partials from MT5? No, the question is not from this one now. What's the meaning of VWAP? VWAP measures the volume. It tells you where the volumes are, okay, for the sell and buy. So when you see the red VWAP, it's telling you that there are a lot of sellers here. So market will be dropping from that end. That's why you notice that anywhere there's VWAP that is red, market drops from there. You see, the moment market touches that area, it drops. The same thing with the green side. And you see this green side, anytime the market comes to the green zone, the green VWAP area, it buys. It comes to the red one, it sells. I hope you understand that. Some people use VWAP as a strategy of trading alone. They use it as a strategy of trading alone. I mean, yeah. So let's go for gold. Somebody mentioned gold, right? I know gold diggers. Everybody today is a gold digger. You know, gold is actually lovable. There's something that I will add to this whole thing at the end of the day. Okay? That will be like a nugget. Now let's go to, now you see, we're not drawing zones for ourselves. Okay? We are going to areas where Smartmonics have drawn zones, right? Now let's look at this one. Thank God that this one does not have a setup yet, but let's look at it. If they have all the things we are looking for. Okay? You know, the style I'm teaching you now is the style where you can take the trade even before. Do you get my point? Even before it retraces like this. Because in as much as this is good, I'm telling you this is good. But if you have a way to catch the move earlier, I mean, sometimes you don't have to wait for this retrace. You just, I mean, you take action. Then another thing is, if you understand what I've just shown you there, you will know when to enter the trade. You will not enter the trade immediately until you see a rejection candle and all those stuff. Now, luckily, we have it here again. Let's look at it together. You see that the market has not, the smart money have not called any setup here, right? Right? I want you to pay attention, especially those of you who did not get it the first time. Now, let's come to this part. This zone was drawn, right? So, definitely, it's another block. Definitely, it's a buy zone. Definitely, even there is liquidity here, even if it's the same. So, there's a lot of money here for the buyers, a lot of money for the sellers. Okay? Definitely, the VWAP also is around that zone. Okay? It's around that zone. So now, what those 5 confirmations that we always use, if you have to look at that, you know, when we say zone, you know, this is the zone, right? It crossed just across. So it's sitting on this zone. Now, how did this move happen? Let's look at it. For those of you who remember, I gave you 3 styles of rejection candle. The one that goes this way, that's the one that is a V shape. The one that goes this way, like smaller candles before a big one. And then the one that combines the two. If you look at this one, if you look at this, though personally, for me personally, I would have even taken this trade. But then let's look at those things. You see that it still match up, right? If you look at this one, which one would you call this? the first one, the V, the second one, or the third one? I'm still waiting. The first, the second, or the third? All right, the second. Wow, I love this class. I love this class. The second. Now you are recognizing. There's what we call the eye of the market. This is how you get the eye of the market without knowing. Now, look at this has happened. Now, the moment it happened, okay, we have all of these ones in place, right? You know why I said I would have taken the trade is because it didn't respect everything that everything like. I mean, look at this one now. It happened here at the top, but I prefer it happening here. You know, I was looking for this then. I prefer it happening here. So if you put your candle here, you see it happen at the top. But just looking at the rejection candle to see how powerful that thing is, that it can, that alone with these other confirmations, with these call outs, can give you money in the market. Now look at, so you see this guy blew out, and then you have this. Now let's count. 1, that's the last candle before the big candle. 1, 2, 3. Count again. 1, 2, 3. Remember our style. Is there a gap between the first and the third? Yes or no? Is there a gap between the first and the third? If you can't see it, let me go back again and then show you. There it is, right? I need more yes or no. Yes, yes, yes. Good, good, good. This audience is the best. Look at it. There is a gap between the first and the third. Now, since there's a gap, what do you do again? Come here. This tool is for free. You don't need to subscribe for this one again. It's part of your subscription. You just come here, put the box so you can know. Why I put the box is it let me know that the beginning, that's the end of the first candle and the beginning of the third candle. It allows me to know that. So that helps me to make my entry. You see? Now remember, when this third candle happened, it's this 1, 2, 3 is 45 minutes already, if you don't know. 15 minutes plus 15 minutes plus 15 minutes. So this happened as this one closes 15 minutes. There's a new candle forming here. Enough 15 minutes is enough time for you to set your buy limit. So let's say you set your buy limit, guys. Set your buy limit for a long. You put it where? Sorry, you put it here. Remember, you put it at the what? At the beginning, the tail beginning of the third candle, and your stop loss will be where? Your stop loss will be a little bit below the liquidity area, the buy zone, all those put together. Just make it small like this. This is 8.7 pip. Imagine that. And then, how do you now go about your TP? Remember, I told you that respect zone. Whenever you see a new zone, you understand? So here now, there is a zone here, right? Even me, I won't even wait for zone. Why I said I won't take trade is because of the VWAP. I will just stretch it because I know it's the VWAP area. It can return anywhere. So for me, one over, if I have 2, it's okay for me. But anyways, so let's say you give yourself 1/2 because it's a zone where I don't want to trade because of the VWAP. That's why I said I won't take the trade, the VWAP and this one. But even at that, for you to know how powerful this rejection candle is around these zones. I'm saying around these zones, not that you go and see one that is not, a zone is not called out. Around these zones, you still make money. You still make money. Do you get my point? That is for gold, right? Let's go for same gold. Let's go to a 1 hour time frame. Maybe we'll see something bigger. Maybe we'll see something bigger. Okay, good, good, good. This one even have a setup for a sell, right? This is a good one, a beautiful one. So let's delete this guy. So again, what has happened here? Let's look at it together. Let's look at this together. Remind me, I told you that this is the first way of taking this entry. Okay, there are 2 ways of taking this entry, right? When you are using this cheat code. I'm just giving you a cheat code, that's it. I've told you how to use the scanner. Normally is you let this go up, it comes back, then you take your buy limits or so. But the cheat code, right? Now, this is going to help me to tell you about the second type of entry. So what do we have here? Again, the market coming this way, going up, going up, going up. Then we have those small candles, blah, blah, blah. Then we have this guy coming out of it. And then how happened? Then another rejection candle came out of this one also. So this one now, if you look at it, this is like the second one, the second type, because all of them are still smaller. If you look at this wick, it's the same size with this one. So this is one that came out. So this is the one before this one, right? The red candle is the one before this long one. Now, as usual, we have that. Do we have those zones? Yes, we have that. We have the VWAP. Good, in the right place. In fact, this one is a very perfect, beautiful one. We have the VWAP in the right place. We have the buy zone, the sell zone in the right place. The VWAP for the sell is the right place. We have the liquidity, and it has more of the buy side liquidity, which means this side now is to grab and then go for selling. You understand? So everything is complete. Now it has the rejection candle painted out already. And we have seen it. The type of rejection candle is the second type, right? Not the V and not the third one. Now, and it has the fair value gap. That gap between 1, 2, 3. There's a gap there. Let's go to the gap again. Look at this. This. You see, that is the gap. So what do you do normally? Do you know that, guys, this is actually a trade that you can take? Okay. Now, looking at this gap here is an entry point. So where would you have put your entry? This is where we have put your... I'm coming 1 minute. I want to make this smaller. Okay, your entry would have been here. I mean, if you take this trade, if you had to take it now, you put your entry here. You know, this is a sell now, unlike the buy. When it was a buy, you put it, so you always target the last candle, the third candle, because if you're counting now for the sell, the first count will be this one, second is this one, third one. It's always the third. So just, it has to be at that tip of that third one. Okay, your stop loss will be a little bit above this. Your TP will be the next zone. See, there's a zone here, guys. There's a zone here. Even if it will break it later on, I mean, if you just want to play safe, just put your whatever here and then make your 1:2 and you're good, right? Now, what are we expecting? We are expecting this market to come back to this zone. Now, in the case where sometimes the market don't come back, like what is showing now, but this may still come back because I'm seeing the push here, may still come back to this zone, okay, to hit the entry for a sell limit. But what if it doesn't come back? So I came up with another idea. And the idea is this, that whenever you want to take a trade like this, okay, if you are using, let's say, one lot size, depending on your account, you divide it into half. You will take one as soon as this rejection candle closes, you take a trade around there, and then you set one for a limit here. That's the second type of entry. That's the aggressive type of entry. You know, I said there's confirmation type of entry, which is the one we are using here, waiting for the retest at that gap area. The second one is aggressive one, which is at the close of this candle. You take your trade. But when you take it at the close of this candle, remember your stop loss has to be here also. Now, when you take your trade, you cannot put the remaining half here. So in case it comes back and tap into it, you have 2 entries and then you make your TP. Mention another trade idea. If you want to take this one, is a good one, but then, you know, it has left. It's only good if it retraces back here. Even if you have to take this confirmation, it has already done what it will do here. This was not, so that's why. So the only way it will be valid if it comes back here, So some of you that want to take this trade, I can tell you, I assure you, you can set a sell limit here. But if it gets to the TP before that, then you forget about it. Okay? All right. So that is that. That is the cheat code for this one that I was talking about, that I said I will tell you about. The aggressive entry and the confirmatory entry. All right. So that being said, let's go to something. I mentioned something. There was something I said I will talk about. Okay. I think it doesn't need, I mean, we don't need that anymore. So if you have any question, I'm ready to answer your question. Okay. But while you are still thinking about your question, I'd like to ask if you all understand what we have just done here. If you notice, I'm coming from a new another dimension. Remember, I started with a real setup. Okay? And I started with the real setup, which means if there's a setup like this, you wait for a retrace. Normal block, other block, how it works is the market will go and then come back and tap into it and then later come down. But if you want to be in the market and you want to quickly make what you want to make, then you use this type of confirmation on your Smartmonics. Okay? Let's go check one more pair. While you are thinking of your questions, for those who have questions, okay? Let's go check one more pair. I just want something. I want variables, right? So maybe you suggest. This is a very good trade, guys. It's a very good trade. I mean, look at it's happening here, but the VWAP and all that, at least, if not for anything, this will give ×2. Any suggestion of pair US30? I think we started with US30, right? We started with US30. Let's check USD JPY. Another thing I'm going to be giving you some knowledge. Number one, I just remember now. Number one, let me tell you, Smartmonics is good when you use them with, for me, I'm not saying it's not okay with crypto. If you want to trade crypto, the best scanner are Trendwave, Supernova, and Q-Short, all those fast paced scanners, right? But Smartmonics is good also. I mean, people use it to take trades from crypto and all that. I'm not saying it's not good. I'm not saying that if you want more win rate, it works well with mostly forex pairs and then indices. And then gold, of course, it works with gold as well. Now, when we say forex pairs, not all these, not all the pairs. Like for me personally, I talk about GBP USD, Euro USD, USD JPY, AUD USD, and that's all for me. That's all the forex pair. Okay, let's talk about USD JPY. You know why I mentioned all these ones? Because of spikes. You know, they don't have that kind of volatility that will cause spike like that, except there's a news. Of course, if there's news, you don't need to trade, right? So this is USD JPY. This is USD JPY. Now look at this one. You know that something is wrong with this one. Do you know why? Number one, look at the liquidity. That is why you see it dancing on above it. So it's actually going up continuously. Liquidity here is saying that we have more red than the green, which means there's sellers liquidity than the buyer. So it has to go up because sellers push you upward to look for another buy zone. But if the buyers were more, it will have pushed it downward to look for more sell zone. Hope you understand. Good. So far, we have not seen harmonic pattern. This is the first time we are seeing one. Okay. So far, I mean, that we started this trading. Okay. So if you want to trade order flow, which for me, I will not advise. Anything you want to do, make sure that you respect those 5 rules. If you want to trade order flow, if you see this now, there's a way you can actually take this also, you make money, but it's not advisable. So what do I advise is when you see this pattern like this happening the same area where there is where there is buy zone, like this one now, let's say there's a buy zone here, there's VWAP here, there's another block here, there's a liquidity here, and also then the rejection candle happens, go in with full margins. I just tell you, I'm the one that says so. Go in with full margin. I'm not saying you're going to use 10 lotto. I'm not saying go in with full margins. Okay? But then, of course, you know, when it comes to Forex, you always leave room for the risk. Okay? So here we have no trade. There's no trade here. It's not working according to our criteria, right? It's not working according to our criteria. So we don't have a trade. What time is it? It's 10:23. Okay, the market is about, I think, closed. I think so. That is why. Let's go for BTC for the sake of, I mean, we're looking for something, right? Let's go to BTC. So far, if you are understanding this, if it's making sense to you, I want you to put the one in the chat box. I like number 1 anyways. Just put the one in the chat box. Don't worry, we know the difference. If you have any question also, somehow we just need this recording. Of course you do. Can you show where to get PDF for this scanner? Oh. So the PDF, actually, I have intention of creating something, but don't let me say it because people start asking. Please ask a question. So there's no PDF here yet. Now this is okay. Let's look at this one now. This is making. Let's look at this one. Let's see if those things were present here. This is BTC. The markets rallied up, went up. The same thing that happened before, isn't it? It came with, like those patterns. You see? Now you have the long one, the long push, which is confirmation candle. That's why the color is here. This is the entry point, right? So the idea is this to go down and then come back and touch into this and then go further. Sometimes they return early, but sometimes they have to go down to return. But yeah. And our aim is what? To enter this trade even during the first journey, right? The first ride, the first rodeo, right? Now, guys, look at it again. You want to confirm. Now, this is not, this only work. We have the VWAP. We have the VWAP. Do we have any zone here? Is it invisible? No
There's a
zone.
question for you, Dimeto.
Yeah?
There's a question for you in the chat box.
Okay. Thank you. The WAP, the VWAP, I couldn't grab you. You moved the cursor fast. Okay. Sorry. And I said I was not going to be fast. My nature is I'm a fast talker, okay? So I try sometimes to slow down. Look at this. This is VWAP. This blurry wave-like stuff looks like a ghost, like a dinosaur, like a ghost in form of dinosaur, or in dinosaur that is like a ghost anyway. Whatever, just put it together. I mean, it looks like a dinosaur, but it looks like the ghost type, like fading. Look at it here. This wave. I hope you can get it now. Can you see it? Do you understand the VWAP? Now this is the VWAP. So beautiful. All right. So let's look at this one. Now, this one doesn't have a zone. Doesn't have a zone. Like, doesn't have this. Doesn't have all of this one, but the scanner called it. And that means something. Before the scanner will now call, of course, there must have been a lot of consideration and all that. So because the scanner called it, I will take it. Yes, I'll take it. Yeah. So now, if the scanner called this trade and all these parameters are already here, the idea is for it to go and then come back to retrace. If you look at this one here, the reason why I don't see any zone here is because there is no confirmed order block. What we have here is order flow. Like you can call this one just a mere resistance. That's another good thing about Smartmonics. It helps you to point out even resistance zone. This is just a resistance. It's not order block zone. Okay? Now, why would I take it? The only reason I would take it is because if the guys of this market, if these guys, the whales, are to do anything, they would have done it, which they have done here. They have done here already. Now, what have they done? If you look at this candle here, it has a wick, and then it came down like this, right? Anytime you see a wick like this, above several other candles in the past, this wick came to collect liquidity. They have come to collect stop losses of people here. All this place now. All this place. All these areas here you are seeing. All these areas here. This one candle that came up has taken all the money here. So liquidity has happened. So they've taken the money. The next thing for them is go down and probably take all the liquidity here too, and which what they are doing already. So that's why I believe that's why Smart Money is called it. So you don't need to worry yourself about whether liquidity has been grabbed or not. Smart Money will tell you whether it is or not. The only thing is the other block zone is not here. It's not clear. So it's a resistance. Another reason why other block is not clear, for those of you who know, for forex traders in the house, newbies, don't worry yourself about this one. Another block is confirmed after a break of structure, right? For those of you who know what that means. See, here now the market came here, came down, got here, came down, got here, came down. This is a zone, right? The moment there's a market that breaks that area. Now this one broke this area, broke them all. Because it came poof once and broke them. That is what they call break of structure. Now there's a break, but after that there's another, up here, up, down, and here there's no like a real break of structure that you can count for another block. It's kind of fuzzy, you understand? So you don't use this. You get it? So that's why you only use it for resistance zone. But for me, why I would take it is because Smart Money's called it, and is around the VWAP, and the liquidity has been taken. And then the concept we are using, of course, will make us keep us a little bit safe. So what are we doing again? Remember, the candle here, you count 1, 2, 3. There's a gap between the first and the third. That gap now supposed to be your entry. But remember, I told you the next thing, as in always, what you always do is what? You take an aggressive one and then you take a limit order. So the aggressive one is actually going down now. The limit one has not come back. The idea is the limit one to come back here because that's the real trade setup for Smartmonics. Remember, I told you from the beginning. After this journey now, this is supposed to make the journey backward. And that's why you see Smartmonics always placing the entry also around that same area I'm talking about. So the idea is this to come back and fill this gap and then comes down again. But we want to capitalize on this move. Imagine if I had taken this trade, I would have been in good profit too, because I would have taken it at the close of this one. So if I had taken it here, my stop loss will have been at the top of, at a little bit above this line, this liquidity guy, right? And I would have run my TP to come to this zone, like anywhere before this zone. There's a new zone here, so I won't follow the TP based on the number of TPs. Even the guy who created this thing says 1 to 3 is always okay. Like 1 to 3 is always okay to be safe, or you take most of your partials at 1 to 3. 1 to 3. You get the point. So you see this, you will have been at least 3 times, or let's say no. The market got here. The market got to TP4. That's like 2.6 times. So $10 would have given you $26 here. It's just to make money here and there, and you're good for the day. You have a lot of trades ideas that will come like this. Okay, don't get me wrong again. This does not negate the fact that you have to trade Smartmonics the right way. I'm just saying that you can catch up from this move and then wait for it to come back and still catch up the real move. That is what this is all about. I need your questions now. The VWAP, okay. What's the another thing again I want to tell you, time frame. Okay, the time frame for Smartmonics, the best is starting from, for me, I like to start from 15. I like 30, 45, 15 and above. I like 15 and above. 5 minutes is okay too, but I don't know. I mean, okay, yeah, I think 5 minutes will be good if you are using this cheat code. It's okay because this cheat code is fast. So it will help you, yeah, for scalping. It will help you real fine. 5 minutes is okay. Yeah, so I'm saying it, 5 minutes is good. It's okay. But, you know, the best time frames are these ones. That is that. So I was going to say something before that time frame thing came in. Oh, God. I was going to say something, and that is very important as well. Okay, because an all-time high and nothing above reference. Yes. Oh, you took it. I trust you, sniper, Coach March. She took the trade. Oh, God. All right. That is something that's very important I want to give. Oh, yeah, I remember. Now, guys, the best time to trade, see, let me tell you one thing. If you want to enjoy this Smartmonics, right? Do you know that you can actually stay on your system and decide to trade within just 2 to 3 hours, and you have like 3, and you would have traded like maybe 4 setups, 3 to 4 setups. That is only when you trade around the session. So if you want to trade, make sure it's around session. Like if you want to trade Asian session now, it's okay. Just know that when you get there, you look for Asian pairs like the JPYs. And sometimes even gold, US30, they thrive around this time as well. Especially when you are using this strategy, they are fast. But the best trading time for me, I'm saying for me now, is US session. You can also trade London session. So you want to ask me now, what are sessions? Of course, just go on Google and type sessions, trading sessions. It will show you everything you need. You understand? Guys, if you don't make money from this one, then you tell me what exactly is going on. So I want to ask you if you have any question now before I close my shop right now. I want to close my office. I want all of us to call it a night. You're going to have the recording. Don't mind me. I talk too fast, but that's my nature. Can you advise the best pairs to use this smart money for? I've just said it before. Let me tell you the best pair. I like US30 on this bad boy. I like GBP USD, Euro USD, USD JPY. Which other one? I like NAS 100 on this one. I like even crypto can work, but you know, for me, I just like, well, you know, vola the movement. Just stick with these ones. You good. How do you know when other block will break? Okay. So this is how it works in markets. You don't know anything. You understand? You don't know anything until it happens. That's why we react. You get my point, brother? I don't know what is a brother or sister, but it's iPhone. Now, we don't know anything until it happens. So we wait for it to happen. Then we now take our that we react. Now you don't know, but another way, okay, yeah, well, you can know another block, any other block, like if you have another block that will break, anyone that has been tampered with, that one has tendency of breaking, but that doesn't guarantee. Okay, fresh, yes, fresh, new other blocks, fresh, not the one that has been touched. That is the essence of other block. It must not be mitigated. Mitigated means it must not be touched. Fresh other block. Do you get? On MT5, it's US 30. Oh, you are talking about broker. They call it Dow Jones, DJ 30. Some call it something, USA, whatever. You know, just type names of US 30 on Google. It will give you all the names so you recognize when you see them. So guys, make sure they are fresh. Like, look at this one, is fresh, untouched. Anything you are doing is fresh. Okay? It's fresh. Let me tell you one thing, guys. What you don't know is this. This thing I'm telling you. You know, we said that when this confirms, let me show you something. I want to show you something now. No, let me go further. My job is to let me make it easy. Don't worry, guys. So if you have any questions, just ask me. Don't mind me. When I'm in the trading sometimes, that thing will be pushing me. Just go further, go further. Let me just stop here. If you have any questions, no questions, guys, let's call it a night. Thank you very much for the session. We're going to do more and more of these. I have my powerful. What broker do I use on MT5? Okay. Yeah. So now, okay, sorry. One of the coaches is already asking you. That's Baker Samuel. Okay. So, guys, I really appreciate you spending this time, especially those of you from eastern part of Africa. Wow, this time is like 12 a.m. in your time. You see, that's why you guys are making so much money. Asante sana, nzuri sana. Good night, guys. Bye-bye. All right. Yeah, thank you. My pleasure. Bye. Good night.